in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari, right? If you look out 20 years. The more uncertain the operating world gets, the more valuable Bitcoin becomes and the more compelling the idea is, because there are no tariffs on Bitcoin. Bitcoin doesn't have supply chains. It doesn't have all of the regulatory risk, the tax risk, the operating and execution risk that you have when you have a business based upon providing products and services in a particular way.
Michael Saylor, executive chairman of MicroStrategy, predicts that one day each Bitcoin could be worth as much as $13 million. With governments printing more money, rising geopolitical tensions, and declining trust in traditional financial systems, an increasing number of people are turning to Bitcoin as a more reliable store of value. Unlike conventional currencies, Bitcoin isn't controlled by any central authority, doesn't depend on physical infrastructure, and operates on open, verifiable code. Saylor believes this ambitious price target is grounded in a clear trend. As monetary policies become more aggressive and traditional assets show signs of fragility, capital naturally flows towards scarcity and independence. Bitcoin's fixed supply and global accessibility make it a perfect fit for this shift. More individuals and companies are starting to see Bitcoin not as a quick trade but as a long-term investment. As uncertainty grows in the global economy, this adoption could accelerate faster than many expect. Stick around until the end of the video to hear Michael Saylor explain why Bitcoin could soar to $13 million as the existing global financial system faces increasing strain.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Every single crisis recruits a new class of Bitcoin believers. There's just a delay in between the crisis and the Bitcoin rally. So for example, in March, Bitcoin crashed with everything else down to like 4,000 or 4,500. And I started buying it in the 9,000s or the 10,000s. And I remember when Bitcoin was 10,000 and the NASDAQ was like 12,000. And, you know, then Bitcoin would rally up and rage, and then there would be a crypto crash and it came down. And on the other hand, here we are today, Bitcoin's like 96 or 97,000, the NASDAQ 17,000. And now we're in a big tariff crisis, and the near-term reaction is always the market cramps and everybody sells everything. But the long-term reaction is, you know, if I had all my money invested in Bitcoin instead of invested in that company, I wouldn't have been affected by tariffs. And so what you have is a reallocation of portfolios to being more Bitcoin, less the other thing. People are thinking now, if I had more Bitcoin, less gold, I would have made a lot more money in the last 4 years. If I had more Bitcoin, less big tech, I would have made a lot more money. If I had more Bitcoin and less that bond instrument, I would have done better. So these are teaching moments, right? And in any macro panic, the most liquid, leverageable asset is Bitcoin. Bitcoin is the only thing that you can sell. You can sell it short with 50x leverage on Saturday morning. It's the only thing that you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile. And if someone wants to sell some financial asset because of some gloom and doom thing that's happened, they're going to go to Bitcoin first because it's the only thing they can trade, and not just trade in the US, trade globally, worldwide. And so it is volatile because it is useful, and it will be in times of panic and contraction. It will correlate for a short moment with other assets, but then it will bounce back and it will break, it'll break that correlation, decouple, and it'll rally higher. And that has happened, consistently for the past 15 years. And it's happening right now as we watch it. So I'm calm in these times because I think we're going to win over a new set of Bitcoin believers, and a new set of people that thought they had the perfect business are going to realize that no investment in real estate and private equity and public equity or in a currency derivative is a risk-free investment. And when we say, look, Bitcoin is not a currency derivative, it is not a company, it is not real estate, it doesn't have a supply chain, it has no employees, it has no nexus, it is not, subject to that counterparty risk. Now there'll be a new class of investors that will understand what it means to be exposed to those risks, and they'll be like, oh, you mean like no tariffs on Bitcoin? Yeah, no tariffs on Bitcoin.
During the 2020 market crash, Bitcoin briefly dipped below $5,000 before bouncing back to the $9,000 to $10,000 range and eventually climbing higher, while many other assets stayed depressed. Today, with Bitcoin trading around $97,000 and global markets again pressured by tariffs and macroeconomic uncertainty, a similar pattern seems to be unfolding. Over the past 15 years, Bitcoin has consistently demonstrated a strong ability to recover quickly after broad market stress, often coming back stronger than before. This resilience stems from Bitcoin's unique structure. It's not a company, it doesn't rely on supply chains, and it carries no exposure to tariffs or counterparty risk. Trading globally 24/7, Bitcoin is often the first asset sold during panic due to its liquidity, and that same liquidity usually makes it the first to rebound. In times when traditional portfolios face instability, Bitcoin's independence and reliability stand out more than ever. Now, let's return to Michael Saylor as he continues his discussion.
We're in the final phase of this bull run. Let me guide you. We've launched Daily Dose Crypto Alpha, a free private Telegram group just for the Daily Dose Crypto family. Inside, I'll guide you through profit-taking strategies, real trading tactics, long-term crypto investing mindset. Only 500 spaces available, then it's closed. If you're serious about this bull run, click the private link to join now.
Are you surprised the US hasn't yet bought Bitcoin?
I'm not surprised. I was surprised that the US has embraced Bitcoin as radically as it has over the last 6 months. I think I didn't expect nearly all the cabinet members to be so enthusiastic, or the Secretary of the Treasury. I didn't expect the Strategic Bitcoin Reserve, to be put in place so quickly. I didn't expect the crypto czar to declare that Bitcoin is, the one, global digital commodity in the world and is digital gold. I didn't expect the President of the United States to say never sell your Bitcoin. So those I didn't expect. I generally expect that large governments will move in a plodding, somewhat methodic, not always rational fashion, because there are just so many interests involved. And so my expectations are moderated in that regard. I think most of the aggressive action will come from small, mid-sized businesses, because they have the most to gain, the least to lose, and they can move the quickest. I think we're going through a rotation right now where, lots of non-economically interested parties are rotating out of the asset, and then a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they kind of had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market. And I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury companies.
What do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari, right? If you look out 20 years. So You have to keep your job. You know, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long-dated, mid-dated mortgage debt. So if I have any kind of property, you know, if I have a house, I would put a long mortgage on it, a 10-year mortgage, a 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, you know, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
Momentum is rapidly building behind strategic Bitcoin reserves as U.S. states move quickly to pass legislation integrating Bitcoin into their financial systems. Recently, New Hampshire and Arizona made history by becoming the first 2 states to establish state-held Bitcoin reserves in quick succession. On May 6, New Hampshire's Republican Governor Kelly Ayotte signed House Bill 302 into law, officially creating the nation's first strategic Bitcoin reserve. Just 1 day later, Arizona's Democratic Governor Katie Hobbs signed House Bill 2749, making Arizona the second state to follow suit. The bipartisan support for these new Bitcoin laws signals a growing recognition of Bitcoin not just as an investment, but as a practical tool states can use. Dennis Porter, head of the Satoshi Action Fund, noted that one law was signed by a Republican and the other by a Democrat, showing how Bitcoin is beginning to bridge political divide. Arizona's new legislation allows the state to convert unclaimed funds into Bitcoin and other digital assets, with strict rules to ensure security and balance. Texas is also close behind, with a similar bill nearing the governor's desk. As state treasuries begin to hold Bitcoin, the asset is stepping further into the mainstream, not only as a hedge but also as a long-term financial planning tool. The momentum behind these moves is undeniable, making it increasingly difficult to dismiss Bitcoin's growing role in government finance. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.